Hello everyone, my name is Kanika Jindal and in this lecture video I'll explain you about the Indian accounting standards. So first is the meaning of IND AS. IND AS are converged IFRS issued by the Government of India under the supervision and control of the Accounting Standard Board of ICAI and the National Advisory Committee of Accounting Standard under the Companies Act 2015. When IFRS were introduced, countries were given two options to implement or comply with IFRS. First option was the adoption and second option was the conversion. Adoption means accepting or endorsing IFRS in its original forms. It means adoption does not permit any change in the language or format of IFRS framed by International Accounting Standard Board. Convergence means to achieve harmony or coordination with IFRS and not complete adoption. So India has decided to go with the latter route, that is the convergence route. So Indian accounting standards converged with IFRS are known as IND AS or Indian Accounting Standards. There are total 39 Indian accounting standards which are converged with IFRS and were notified by the Ministry of Corporate Affairs on 16th of February 2015. Let us now understand the roadmap of IND AS implementation in India. So it started in phases. First phase started in 2015 when it was a voluntary option for the companies to adopt IND AS for preparing financial statements. But if they do so, they will be required to prepare the comparative figures on the previous accounting period as per IND AS, and once a company opts to follow the IND AS, it will be required to follow them in the subsequent financial statements also. On 1st April 2016, it became mandatory for the companies listed with a net worth of rupees 500 crore or more, unlisted with the net worth of rupees 500 crores or more, and the parent, subsidiary, joint ventures of all such companies to implement IND AS while preparing the financial statements. Phase 2 started with 2017 when it became mandatory for all listed companies which are not covered in phase 1 and all unlisted companies with a net worth of rupees 250 crores or more to implement IND AS. Phase 3 started from 2018 when it became mandatory for NBFCs with a net worth of rupees 500 crores or more to implement IND AS while preparing the financial statements. Phase 4 started from 2019 and it became mandatory for all NBFCs not covered in phase 3 also and for all unlisted NBFCs with a net worth of rupees 250 crores to 500 crores. In phase 5, which started from 2020, it became mandatory for the insurance company also. Let us now understand the difference between accounting standards and Indian accounting standards. Accounting standards were based on international accounting standards, and Indian accounting standards are based on international financial reporting standards. Accounting standards are rule-based, but Indian accounting standards are principle-based. Principle-based means that under IND AS, preference shares are treated as loan as they carry a certain fixed rate of dividend. Next is financial statements which are based on accounting standards may not be universally accepted, while the financial statements based on IND AS are universally accepted. IND AS are based on the concept of historical cost and Indian accounting standards are based on the concept of fair value. For example, in case of amalgamation, assets acquired are to be recorded at fair values only instead of the historical cost. List of IND AS is divided into two sets of series. IND AS 101 to 115 are converged from IFRS 1 to 15 and IND AS 1 to 41 are converged from IAS 1 to 41. So that was all about Indian accounting standard. Thank you so much and have a nice day.